Welcome back to TechKidFX for another price prediction update, and in this video I'll be giving you a price prediction update on Harmony One, whose current price stands at the $0.02061 mark, and here on TradingView the market is down by 1.76%. And in this video I'll be giving you the key scenarios that I expect to play out, basing my analysis on the Elliot waves and the Fibonacci's, and also the key areas of support and resistances. So if you're interested in such content, make sure that you stick around till the end of the video. And I'll kickstart the video by giving a brief of what has been happening on this chart. Harmony One, from the all-time high, has been seeing lower prices in this massive ABC correction, which has now taken us back to around the $0.016 mark. And starting my analysis here on the daily chart, after making our low at around the $0.016 mark, we saw a very nice bounce to the upside, also managed to break above key areas of resistances, and at the key area of resistance at around the $0.03476 mark, we got rejected, and we are seeing a massive pullback to the lower side. Jumping to the 4-hour chart for further analysis. Here on the 4-hour chart, you can see after making our low at around the $0.016 mark, we had been making a series of highs to the upside, and that was an indication that the buyers were taking over the market, but at some point they lost it to the sellers, who took us back to around the $0.018 mark. And from that point we saw a very nice bounce to the upside and made a new high at around the $0.034 mark. And in my previous videos I was terming this movement to the upside as an Elliot wave structure, having this as the first wave to the upside, then this as the second wave, then a third wave. Then I expected a retracement to the lower side in the formation of a wave 4, then continue pushing higher in the formation of a wave 5 to complete a higher Elliot wave count 1, but that movement to the upside got invalidated the moment our wave 4 retraced into the high of that first wave. And after doing that, I had to remove my Elliot wave structure from the charts and view this movement to the upside as something else. And the only way we can view this movement to the upside as is just a massive ABC corrective movement that was correcting that impulsive movement to the lower side that gave us a lower low. And after making that high for that massive ABC corrective movement, whatever I expect on this other side is the formation of a 5-wave structure. So if I jump to the 1-hour chart so that we can see this better, here on the 4-hour chart, we can see the formation of a 5-wave structure to the lower side, having this as the wave 1, wave 2, wave 3. Then we have seen the formation of a wave 4, then completed that higher Elliot wave count 1 by the formation of a wave 5, making a low at around the $0.018 mark. And if I get a little bit into the details of the formation of this fractal wave so that I can also get the key scenarios that I expect to play out, if I use the fibs to get a target area for that third wave to the lower side, I just need to connect the fibs from the high of the wave 1 to the low of the wave 1, then dragging the fibs to the high of the wave 2. That gives me a minimum target area for that third wave to the lower side at the fib level 1.618, and that is at around the $0.021 mark. And you can see Harmony One respected that. We came down and made our low for that third wave to the lower side at around the $0.018 mark, then saw a very nice movement to the upside in the formation of a wave 4, then completed the formation of a higher Elliot wave count 1 by the formation of a wave 5, and whatever we are seeing on this other side might be the formation of a second wave to the upside. And because a wave 2 is a corrective wave, we can use the Fibonacci's to get a minimum target area for that second wave to the upside, and I just need to connect the fibs from the high of the wave 1 to the low of the wave 1, and that gives me a minimum target area for that second wave between the fib level 0.618 and the fib level 0.382 as a maximum, as a minimum. So removing the fibs so that we can see this better and also get to the key scenarios that I expect to play out on this chart. A wave 2 being a corrective wave, we also expect to see a corrective movement over here, that is an ABC corrective movement. And from what I have here on the charts, we can term this as a wave A to the upside. Then we have maybe made that low for that ABC corrective movement. Then I'm expecting higher prices in the formation of a wave C to get us into this yellow target area to complete the formation of that second wave to the upside. And for that to play out, I would expect us, once we make the low for that wave B, then we can continue pushing higher, manage to break above this key area of resistance at around the $0.021 mark, have a retest of that key area of resistance, then continue pushing higher to get us into that yellow target area in the formation of our wave 2. And once we have maximized the formation of our wave 2, then we can expect lower prices in the formation of a third wave to the lower side. And once that plays out, I can also use the trend-based Fibonacci to get a minimum target area for that third wave to the lower side. We can also invalidate this movement to the lower side in the formation of a third wave in case in the formation of a wave 2 we manage to break above the key area of resistance at around the $0.029 mark, continue pushing higher and make a new high above the high that we have at around the $0.034 mark. In case that happens and we make a high above that key area of resistance, then we can say that movement to the lower side in the formation of a 5-wave structure has been invalidated, and we need to look at this chart in a different way. Also going back to the 4-hour chart so that we can also take a look at the indicators. Here on the RSI, we are trading at around the 37 mark, and that means we have massive room for us to support any movement to the upside in the formation of our wave 2. Also going back to the MACD, on the MACD we had printed a bearish crossover here, but we are losing the selling volume here on the MACD, so soon we might be printing a bullish cross. So let's be patient and see how that plays out, and I'll keep you updated.